All righty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Bran says, good morning, Blake. I'm glad to see your take on what's coming up. Yeah, I was just mentioning this in the chat room, and I'm going to just give it to you guys really simple. A lot of times with the Fed, people can make it really quite difficult. For me, I'm going to simplify things just a little bit here. I'm really going to the chart I'm really going to focus on the most it's gold, and everything else will follow suit, right? I don't necessarily, and Leon jumped in and he's like, well, be careful of the false breakdown in gold. I don't really care about that necessarily because I don't think gold's going anywhere. Like, I don't look at gold and say, gold's going down to 1,500 today or back to 1,800. I don't feel that way. What I feel is gold from where we currently sit, and let me go ahead and grab this really quick. You know what? I'm going to leave that there for now. Gold sits here, right? I have a feeling gold's going to be here or here. I don't want to draw over that because I'm going to delete these. It's going to be here or here by the end of the day. That's what I feel, right? So I'm not going to overcomplicate things by saying, okay, I'm looking for a breakdown in gold, and then gold breaks down, then I'm going to buy the dollar, and if gold gets back over here and breaks out, I'm going to sell the dollar. No. I'm more concerned on, like, I can see directionality in the markets through gold. That's the way I'm going to be approaching it. And really, if gold sells off, I'm going to be buying dollars. And if gold goes up, I'm going to be selling dollars. It's really that simple. Now, your question might be to me, well, what are you going to focus your attention on? What pairs will you focus your attention on? I'll tell you as we go through the analysis process. But that's really what I'm going to be doing, is I'm going to be watching gold really carefully, because gold is going to drive what I'm going to do in the currency market today. All right. I have bought, just so you guys all know, I bought some US dollar Norwegian krona today because I want to be positioned in this ahead of the Fed. So I bought some today down here. I'm actually break even right now. So, you got to imagine the spread's a little higher. So I paid these prices for it about an hour and a half ago. So when it was down here, it's 863. I paid where we're currently at 863.50. I'm buying it because I think we're going to revert back to the mean a little bit right here ahead of the Fed, right? And then I can just move my stop to break even. Because you guys know I took all my dollars off yesterday. For those of you that don't know, I did. But I'm trying to reestablish them. I'd like to have some dollar longs into today at decent prices, right? And so the dollar Norway is the one that I like the most, personally. I mean, I actually think that the US dollar South African rand is holding up pretty damn well too. And I have to also admit the dollar Mexican peso is too. So, I think there's a lot of different selections here, but basically what I think is going to happen is that the Fed's going to prepare the market for tapering. I don't think anything's really changed here. I think their big risk right now is China. Is China slowing down? And like I said about what I said about Evergrande, I think it's a bigger risk. It's more of a product of the where we're at, or a product of the Chinese economy, a systemic problem, if you will. In China. So I think that's the big risk for the Fed. Trying to actually taper and raise rates in the months ahead is going to be that. But anyway, let's go into, I was going to buy the dollar Canadian this morning, and here we go. just kind of popping towards highs. Let's go ahead and go through our charts here. Steve is not going to be here this morning, just Stelios and I. So just let you guys know, he has a personal thing he had to attend to. He'll be back tomorrow. So just letting you guys all know. All right. So here's the 38% retracement. You can see we're holding. I'm going to give it down towards 2002. Well, actually, you know what? Screw that. We're going to do this. We're going to give it all the way down to 1998 today for support. And you guys know big resistance 2022. We break 2022, we go bullish because that's that 618 retracement, right? We're above the 200-day moving average. You can see this is like on a, you could think of it like this. All sorts of, ways you can view this. But I think we get above 2022 and you want to be long dollar max. Hold on one second. Okay. Guess what? Sorry, I was just chatting with the team. Guess what, guys? This is for you. I'm sorry, I was quiet because I was in the middle of typing something. Greg is going to come here today. He's going to be here in 15 minutes. So you guys are in really good shape. You're going to get Elliott wave point of view. How exciting is that? Are you stoked? Are you happy? Are you sad? Grega Horvat's going to give you a little one-on-one in action. Vlad said nice, or no, Hugo said nice, and Vlad says happy. Yeah, of course. Okay, so do you know what that means? I've got to. Amira said we love Steve. No, Amira, you love Steve. No one else loves Steve here.
That means you have to go relatively quickly, Blake.
Yeah, I gotta get moving. Okay, jokes aside, guys, I really, it's exciting. Grega gets to spend a little bit of time here with us today. So let me get moving. All right, so let's go over to the euro. Sorry, I was just typing everything. We were just trying to figure it out logistics wise. So the euro, trend line resistance here. I think that's going to be significant. Support is obviously very, very, I say in the euro dollar, the support is very obvious now. You guys can see this 117 level is huge, right? But what's more important, what you guys might be thinking is, oh, that low is really important down here at 65. It is, but it isn't. My opinion is if we break back below 17, we are not stopping. Okay. Because think about the psychology of this. This was a false breakdown. Everybody got squeezed out. Everybody got long, and everybody else is thinking, okay, as long as we don't break through that, we're good. We're golden. We're almost there. So the problem is if we start breaking through 117, you're going to get everybody who got long the euro getting out. Because they're going to be like, screw this. We're going to we're going to 115 now. So you're going to get everybody getting stopped out below 117. So actually it's, we're going to write down 116.65 and then 116.95. That is critical for the bulls right now. Then obviously resistance is back up here. So it's the 618 retracement, spike high, but that also matches up pretty close with that trend line. So, 117, basically 90. Okay. Okay. And, we break through 117.90. We're going to go bullish here. We break through 16.95. We're going to flip it to bearish. So you can see we are in a very tight range. And this range is going to break more than likely today. I'm hoping it does. Obviously, I'm going to be really bummed out if it doesn't. So, Sterling looks like poop on a stick, guys. It does. You guys are like, oh, poop on a stick. Classy, Blake. Yep, classy. Really important support, 135.60. You can see we're almost at the 618 horizontal support. So we're going to go 136.08, 135.65. So we're writing down both today. 136.10, right? I mean, we're almost there, but yeah, but you can see this trend line being broke. That, in my opinion, puts all this at risk. So, and while we're below 137.25, I think we wrote that down yesterday, but I'm not going to flip it to bearish yet without getting confirmation from the dollar, but you guys can see my hesitation here. I'm really, I'm getting a little nervous about, if you were a dollar bear, you have to be scared right now. I say this all the time, but I try to put myself in the shoes of somebody who's on the other side of the market. So, I may not have any pound dollar exposure right now or euro dollar exposure right at the moment, but I'm trying to think of it from both points of view. If I'm long the euro, I'm thinking, gosh, that's scary. If I'm short the euro, I'm happy as a clam because I'm like, oh, stocks are moving lower. The dollar is just starting to get firmed up here. And boy, if stocks really start to break down, the dollar's going to catch hold. Then think about all the longs that are long right now. They're about ready to get stopped out. Again, you just think about it from both traders' point of view. There are a lot of people thinking Aussie longs right now. I know, you guys probably heard Brent Donnelly's interview from a couple of days ago. He's thinking positioning's pretty short. I think the whole market's thinking, hey, we're going to start squeezing here in the Aussie. I'm not so convinced about that. And I can't be convinced about it while we're below this dotted line here. So 72.85, that's resistance right now. And to be fair, I think this 71.82 level, the 78% retracement is the next stop. Well, let's just call it 71.80. And I'm going to keep it in range, but you think about this from a channel standpoint, looks something like that, right? That's the lower end of this channel. Kiwi looks like crap. I thought we would be more mid-range by now, but man, Kiwi is acting heavy. We break through 69.90. You're going to get a lot of bulls that are disappointed. A lot of people trying to play in the Kiwi on the long side right now. And that's not resistance. This is now resistance because we can't get a leg up at the moment. So 70.60 is resistance. Remember, everything right now is almost universally range bound. I am expecting after today, these are going to start flipping. Brand asks, is this like a triple bottom, this euro dollar? I mean, triple bottoms and triple tops and stuff like that. Do you know what triple tops build? Stops. That's right. So I don't look at it as such unless we break to the top side, because then, you break to the top side and then you've got the triple bottoms in play, range extensions, you start pointing back towards, 122. This is just really big support. And I think that a lot of people are trying to play it down here with stops below 117 and stops below 1. I think there's stop. The thing about stops, and let me draw this out really quick for you guys. Every time I'm going to do something that I don't normally draw on here. Let's go to let me just kind of, okay, this is fine. So the thing about resistance and support levels, when you get towards a support, everybody's like, ooh, there's a support. There's a support. So where are their stops going? Their stops are just being built all down here. Bunch of stops are layering now, right? Around these levels, stops after stops after stops, right? Because it's a triple bottom, it's a double bottom, it's a quadruple bottom, it's a, bottom, it's, oh, look, it's a, so what happens? More stops get built, more stops get put in. And then what happens is then you break through that, and then all of these stops get triggered and cause an avalanche of selling because everybody's trying to play a quote unquote double top or double bottom, triple bottom, whatever. So I don't get excited about, I don't like if I see a top and I'm like, oh, hey, there's a, people are calling for triple tops or whatever. I'll be like, no, that's just good resistance right now. It's just good resistance, right? All right. Anyway, sorry, going to continue on. I know Grega's popping in here. Dollar Canadian. All right. Nice triangle being developed here. And I mean, we're already trying to break this. I know that's pre FOMC, excitement here, but that was my fault. I'm going to mark up 128 and a quarter, then 129, 128.25, 129. We're going to keep it in range, right? And then support being 127.70 and then 127 and a quarter, which you guys already know that number, 127.25, 127.70. Okay. Swissy. 92 cents, which is trendline support, right? 93.30, which is that 161% extension that held. So yeah, we're gonna have to write that down. I'm not excited about the Swissy right now because I missed it. You guys know I'm trying to buy this already. I mean, I already bought some, but I mean, I'm wanting to be long down here. See that little false breakdown below 618, but it can, I mean, I actually think that the US dollar Norwegian krona can trade to either side of this range today, honestly. And Norway has a central bank rate decision tomorrow. So just FYI, I think we can trade to either side of this range, to be fair, because, we have a hawkish Fed. Dollar Norwegian krona is going to test 880. And, we have a dovish FOMC ahead of the, Norges Bank decision. We'll slump to this 855 level. So that's a really wide range, I know, but it is what it is. And I'm going to keep this on range now, not bearish, because we popped back above that 873. So it's already proved to us that it's squeezable. I know I mentioned that yesterday, but dollar mex, that's a bull flag setting up. Now, do we already mark that? We did. Okay. So let's continue on. Dollar yen. Dollar yen is your problem, not my problem. What I mean by that is you can trade it. I'm not trading it. Hardest currency pair to read right now. The hardest. I'm not going to repeat what I said on Twitter. 110.10, 109.10. You guys have fun with that one. Too many cross currents right now in that. I cannot get a good read on it. Obviously, I mean, look at this thing. How are you supposed to trade that? Other than it's intraday, it's overbought. You need to short it. It's too oversold. You need to buy it. I mean, that's the only thing you can really do right now. I mean, and just hope it holds these range lows. And then, then you get one of these where it looks like it's breaking down and then it reverses on you, so it's like, why even deal with it? You guys can have fun with it. Your problem, not mine. Dollar index. Triangle forming, resistance. I'm just going to write these two levels. 93.45 support. I'm not writing that spike low. I'm going to write this high right over here. 92.95. $93.45, right? Range. Again, I'm expecting a lot of this stuff to flip tomorrow. If you missed it earlier, and I'm going to say this again, because I said it right at the beginning, and we have like double the amount of people that are listening in right now than were when I said this the first time. So I'm going to say it again. I'm watching gold today. Gold is going to guide what I'm going to do today. If you believe that I think that gold is going to go into meltdown mode or break out, to like it's nobody's business today, I don't feel that way. I feel that gold from here will test the lower end of a range or the higher end of the range. Now, it could obviously go one way or the other, but I'm not looking at gold to trade it. I'm looking at gold to use it to confirm what I'm doing with dollars. If gold goes lower, I'm buying dollars. If gold trades back down towards 1740, 1730, here, I'll write it down, 1737, but I'll write down 1735. Then I'm going to buy dollars. If it gets back up to 1835, which is key resistance, right here, key resistance, 1835. We get up here, then I need to be buying Aussie dollars. Okay. So I'm using gold today more as a confirmation tool for how I'm going to play dollars. I'm not in the camp that I believe that gold's going to hell in a handbasket today, or it's ripping to 2000 today. I'm not in that camp. I'm in a gold is going to show me what I should be doing with the dollar, or it's going to be confirming what I'm doing with the dollar. Like I'll be looking at, like, give you an example. Oh, I think that the Fed comes out and they seem pretty hawkish, and then all of a sudden stocks start coming down. I'm probably, first thing I'm going to do is I'm going to add to my US dollar Norwegian krona position. I'm going to get much longer, right? And then I'm going to look at gold and make sure gold's going down to confirm that I'm on the right path with the US dollar Norwegian krona. Does it make sense? So I'll use gold as a confirmation tool today. I have no intention of trading it today. Zero. Silver. Let me delete this really quick. I want to get rid of that. Okay. We're getting into that resistance zone, right? The most pivotal area, and I know we've gone around it, like you've seen that little plunge below and plunge above. This 618, the previous 618, it's at $23. I mean, and you can see right here, we went as high as 23.10 or 23.10. That's significant today. And, the risk is that we, come back down and test these spike lows down here. That's the risk. 21.75. I am, because it's Fed day, I'm not going to do it. But I feel that silver is bearish. Stelios, don't kill me. I mean, it just,
it's a binary event today.
It is a binary event. And that's why we have to like really just kind of keep everything range bound at the moment. Ethereum looks like crap. And so does Bitcoin. We're below the 200-day moving average in Bitcoin. I was listening to a very interesting podcast yesterday about cryptos and about the markets in general, and just kind of from this hedge fund manager, it really kind of confirms my thinkings that Bitcoin or blockchain is here to stay, right? It's getting woven into the financial fabric of our markets, whether you like it or not. But and that's the way I feel that a lot of these altcoins are going to disappear, and then there's going to be a few ones standing. But the point that was made yesterday was, in the internet bubble, Google didn't emerge until it didn't go public till 2003, 2004, post bubble, right? So, I mean, the jury's still out if Ethereum or Bitcoin or, Solana or whatever the technology is going to be the one that really is the standout in the crowd moving forward. It could be one that we haven't even heard of as of yet. And so I found that rather interesting, but I think, it's got a place. I just hope that Bitcoin, gets slammed down towards, the 20, 25,000 level technically, so I can buy it. That's all I really care about at this stage in the game. Now that we're below that 42.5 level, I think the risk is that we push down to 37,000. I don't want to say it's bearish because I don't believe it is, but I think that rallies towards 43,000 should find, or 44,000, excuse me, this previous support here should find sellers. Okay. So just keep that in mind. S&P is bearish. S&P is the only thing that is bearish right now that will be on our bias chart as being bearish. And you guys know my setup here. If you're in the chat rooms, or even if you're listening to the FACE webinar, you know exactly how I feel about this. What I'm hoping happens today regarding the S&P is we get the dot plot doesn't give us much to go on. And people are like, well, it's not dovish or it's not hawkish. So then, people say they say that the Fed is dovish, and then, the stock market actually spikes up towards 44.50, where I can be a seller. I think you sell into strength up into that level. That's a Gartley pattern developing, and I would love to be a seller up here. Support, and we may not get that opportunity. I mean, I'm drawing this right now as you guys see it. Hold on, I'm drawing it like this because that's what I hope happens. But what I hope happens and what actually happens can be two completely different things. I hope that happens, but what may happen is we do this and there's no catching rallies. The one thing I have to point out here is don't forget, stocks have been going straight up for years. And if we get into a situation, which it's inevitable for a period of time, we're going to see stocks where your conversation, my conversation is going to be a lot like this at some point, probably closer to sooner rather than later. At some point in the very near future, we're going to say this to each other. Stelios, my God, this market never bounces. It just goes down every single day. That's the conversation we're going to have sometime, probably fairly soon. Just like we've said for so long, oh my God, the stock market never comes down. It just goes up and up and up. Right?
I think central banks are so biased that they're going to step in all guns blazing whenever we get a down move. So I think we will get a down move, but it's not going to be prolonged. That's my view.
But it could be just a grind lower.
Could be, yes.
You know, where we're just like every day, like we see the S&P gap up like 10 or 15 points. And then by the end of the day, we're down 10 or 15 points. And we're like, oh my God, this market just doesn't bounce. We are going to get into that market.
Yep.
You know, at some point it's the sentiment changes. And when it changes, it's a mother sucker to turn around. All right. So anyway, there's your bias chart. You guys got it. Stelios will post it, and Grega's here. So Grega should be here anyway. Grega?
Yeah, I'm here.
Hey, you're like, Blake, shut up. My God.
Waiting on the line. Yeah.
I know you've been waiting here forever. I'm so sorry. I'm going to shut up now. I'm going to let Grega take you guys. Stelios, thank you for posting that. Grega, good luck today. Good to hear your voice. I'm going to actually just mute my microphone, let you take over, and I'm going to shut the hell up.
Yeah, no problem.
All right. Good luck, guys.
Stelios, how are you? Is Stelios still around?
I am here. Yes, Grega. How you doing, man?
I'm fine. Thank you. So what do you think about metals?
What do I think about metals? It's clearly a binary decision today, a binary event, but I think
I'm sorry. Before you talk too far, Greg, I can't see your charts.
Yeah, I will share it just now.
Okay.
Yeah. I've said this before. I think we're going higher, but in the short term, they have been underperforming metals. That's for sure, and that's what worries me. And that's why I'm not full size long yet. I'm actually far from it. I'm only like a third size long. So it depends on what the Fed does today. But I'm bullish in the medium term, but in the short term, I'm a bit skeptical. That's why I'm not too long yet.
Yeah. I mean, okay, let's then look at some charts here. I'm also seeing metals as like being just in a very long consolidation. I think it's lasting now since last August or something. So I think it's based from constructive point of view. I mean, where market always catch some breath before they may continue higher. I just think that it's looking quite constructive here after this very nice breakout that went to reversal that we have seen here last year. And now we are actually trying to pull back here in a corrective formation exactly towards 20 area, $21, where you have this previous swing high. So I'm seeing this as a counter trend movement. And what makes things even more interesting is that you have a potential wedge here building down from that spike high when everyone were so excited about being long silver. So I'm seeing this as a counter trend movement now approaching some support. We of course have room left for 21, maybe even $20, but overall I would be looking for potential reversal here. If we can see a break out of this wedge, then I think that there will be a chance for this market to recover towards much higher prices, or at least towards the upper side of this range. But overall, I just have to stick to the bullish case here, since we have a very nice and clear impulsive price action from last year lows. So I will continue to observe the potential supports in the near future. Now, if we take a look also on gold, what I really love about the recent developments, despite seeing silver coming sharply to the downside, gold is doing very well. In fact, it's up in the last few days. So this makes me think that metals are not so bearish as it looks when looking at silver. So I'm looking here at gold, which is consolidating. Here it's a triangle. Probably we slowed down at a 38.2% after that crash a few weeks back. So now we are just continuing to resume to the right side of the price chart, meaning it's probably a contracting triangle. I'm observing an ABCDE pattern. So still ongoing consolidation, similar like silver, also still ongoing consolidation. We are not finished there yet. But what is interesting, at least in the short term, from an Elliott wave perspective, now, if you're familiar with the Elliott waves, then you know that every time, let me show you, every time when you see a 5-wave movement after this massive drop that occurred here in August, always when you see this 5-wave movement from a new low, well, that is a signal, at least for me, that something is changing, that the price direction and the personality is changing aggressively compared to the previous bear market, when we have this bear market showing us 5 waves down. So that was a downtrend. Now here is an uptrend, a reversal. What's the most important right now is that after these 5 waves up, we were seeing a 3-wave drop, and I've been highlighting this potential support area for a while in our member sections, and I said that we are probably at key do-or-die level and that we could rally. And so far we have seen a very nice bounce here, not out of this downward channel yet, which means we have to be a little bit careful. So today it's a key day probably, and if the Fed will not do much, I think that we can actually see much more upside here on this market. Also, if you try to ignore the Elliott wave labeling here and just focus on the price action here from June, you can see here very nicely left shoulder, then you have head and the right shoulder, and there around 1830 its potential neckline. So you're now at the potential support, turning away from it after completing this right shoulder. Of course, head and shoulders patterns are not finished, or I should say the breakout is not there yet until you see this neckline broken. So we are still far away, but so far it looks very constructive with this basic technical analysis approach, if I consider also the Elliott wave principle. Okay, so if I want to be long metals, I would probably watch the price action tomorrow after the Fed, after things will calm down. If we will be out of this downward channel, then I think that there can be actually, even if just short-term opportunities on the long side while we are trading here above 1740. But at this stage, it's still a little bit risky because we have important event and the breakout is not here yet. Okay, so regarding dollar bearish view, that's probably the market that I would personally look for. Then you have another market, which, as Blake said, I mean, he sees that there are a lot of people expecting Aussie to continue higher. And if we look at this COT data, we can see that shorts are at extremes, and always when, not always, but for the last 2 years, when we were at these levels where we have seen a recovery, even if just short term. So I think that Aussie, of course, could be trading around the support, maybe not at the recent low, maybe there will be a new low retested, but eventually I think that Aussie dollar will turn to the upside. Also, last year in October, we have seen Aussie dollar as you can see here, is October 20. Also, end of November, we have seen a reversal higher on Aussie dollar after the situation of COVID has gone better. So I'm thinking about very similar cycles right now. And if I consider this COT data, then I think that we really, even if it's just not if it's not here yet, at least we should be prepared and be aware of potential rally. Of course, we'll see again what Fed will do, how stocks will respond to the current at the current support levels. Also, since we are mentioning here on Aussie data here regarding the sentiment, let's take a look also on Euro Aussie. I think that this one, from a technical perspective, it's quite interesting. Okay, now, firstly, we came to the downside here on this monthly chart towards this lower trend line support. Okay, we are now rallying away from it. But then last month, you have this doji formation here, which makes me think that we could see some weakness coming through. But then I look at this recovery from an Elliott wave perspective. I see an overlapping structure, and more importantly, this drop that we have recently seen from August highs is quite strong, and with the price breaking the trend line, which is now trying to act as a resistance right here. Okay, so if you're just basic technical analyst and you have this kind of approach and not advanced Elliott waves, in Elliott waves, then probably you would also be aware of potential sell-off right here. Well, when looking at the 4-hour chart, again, you have an overlapping recovery here. It's very hard for me to count this as in impulsive fashion. Okay, even if Euro Aussie would be supportive, I think this should occur after a drop and then from the lower support levels, let's say 1.58 level. Okay, so I'm seeing this as a counter trend movement. Of course, again, it's very similar compared to Aussie. We are there in a potential deep bullish flag formation, still in the downward channel. There's no breakout yet. Of course, we have the similar situation here as well. But I'm observing this one for overall signal regarding the risk on, risk off sentiment. I mean, Euro Aussie is a very good guide to see where we are headed. If we are going to see a break to the downside, then overall this will mean that commodity currencies are again in focus, back in focus, especially if stocks will jump higher at the same time. Also, let's take a look on New Zealand dollar. Have it. Okay, so here we have New Zealand dollar. Looking at the higher scale here, we bounced from that support area and notice that the drop here is overlapping. Okay, so I'm looking at New Zealand overall like one of the best currencies if we are going to resume global trends in risk on environment. Then I think that New Zealand overall should be very attractive. It has been one of the strongest when we have seen this bounce here on here in August. Also looking at the intraday price action here, notice that the drop is in 3 waves. Okay, and you are potentially now at the support level. So if we can rally, and let's say that we finish today somewhere around 70-75, that would be my confirmation that this was correction and that we are actually indeed headed higher. Let's take a look what I have left here. I have the list here. Is anyone interested in Bitcoin? I can take a look on Bitcoin.
We're always interested in Bitcoin.
Yeah, especially you and Steve. I mean, I said this several times in the past that trading cryptos is not so easy because they are very volatile. Okay, so much easier approach is cyclical approach, meaning that you focus on next potential cycles whenever we see a deep retracement. And this has proved to be correct here always when we have seen a 70 or 80% of drop here in Bitcoin. this price has recovered. But so far from the recent highs, a retracement was only for around 50%. So 70% is still a little bit lower. Also, again, the Elliott waves shows a very clean 5 waves down. And I've been looking for this rally here to be at least in 3 waves. I must admit that it's a little bit tricky, not a perfect 3-wave move, because typically you will see that wave 3 will be extended, not wave C. So I prepared 2 wave counts. But what is interesting that, again, in the member sections, I shared 2 wave counts and both suggested the same, that there is going to be a limited upside and minimum 3 wave drop. Either that was stop of a wave C, and you will see later on this 3 wave drop become a 5 wave movement, or as I can show you here, will this 3 wave drop be only higher degree correction before we are continuing higher. So I think that now it's very tough to say whenever we go higher or lower, but there are a few things to consider. Firstly, you can take a look at Bitcoin exchanges flows. Okay, what this data tells you or show you, let me make this screen wider, just a second.
I haven't seen that before. What does that show? Anyway, you'll show us.
Yeah, it's loading. Yeah. I'm not sure. Okay, so actually it shows you how much of Bitcoins are there on exchanges. Okay, it means that, of course, if people want to go and transfer their Bitcoins into some other altcoins, what firstly will have to do, they will have to transfer their Bitcoins or Ethereums, whatever, from their private wallets to exchanges. So if this when this happens, actually, it means that they want to get rid of their Bitcoins for something else, right? And what we are seeing here, that we are here still at the lows of this data. So because we are at some of the extreme levels, I assume that sooner or later, this cycle will change. Again, a lot of Bitcoins can be transferred into exchanges, something similar like we have seen here in April. And notice that there was an all-time high in Bitcoin, but now we are at even lower levels regarding these exchanges, Bitcoin to be on exchanges. So it means that if people and investors will actually decide to make those transfers, it means that they will try to sell their Bitcoins, and this could even accelerate the current sell-off. Okay, does it make sense?
Yeah, I get it. Okay, interesting.
Yeah, so I think that of course it's not ideal opportunity to be long Bitcoin at this stage. It would be a different story if we would see a lot of Bitcoins already be on the other side, meaning be on the exchanges like we have seen here in May. Okay, so I think that there's still a little bit worrying situation because people are maybe still waiting if this current sell-off will extend a little bit lower, then maybe they will try to finally to get rid of their Bitcoins. Also, I have here this gap check map. I think it's here. No, it's not. Just a second. I can see that I'm always, as you know, students, I'm always looking at Bitcoin gaps as well. And not only on Bitcoins, but also on other.
Question is, which exchange are you looking at? Because there's so many, right?
Yes,
They can differ.
I'm looking at futures.
Ah, okay. Yeah, got it.
Yeah.
That's good.
Okay. So what we have here is actually that usually when this gap occurs, as you know, price will try to go away from the gaps, but then sooner or later they will try to retrace back into the gap like a magnet, probably because of unfilled orders in this area. And then market, whenever the gap is filled, again, another change in the direction occurs. So we have seen a few gaps in the past here that were filled and then market reversed. Also, the recent gap that was filled was here back from May 17. And now we are going slightly lower. And what I see is another gap here lower at July levels. It's around 33,000. So again, another indication why I think we should be a little bit careful if you really want to be long Bitcoin. Of course, I'm looking at this from a short-term perspective. So I think that overall, based on the percentage that I said, based on these exchanges, that people are still holding their Bitcoins, I just think that there will be much better opportunity to go in this market. Okay, that was for Bitcoin. Do we have any questions maybe?
That was great, Grega. I see a question on silver. We covered that. While we do that, I wrote it on the chat as well. I just want to say it. I know people like Chad have been following. I got long on Monday that uranium ETF URA, and I'm taking half off. This was on Monday. I'm taking half off. I just took half off actually at 25.25, and that's about 6% in 2 days. And I'm running the rest through the Fed with stop at break even. So I'm just taking it a little bit easy now because the Fed could always surprise. We know that.
Yeah, I mean, are you worrying about? Are you worrying about potentially lower commodities in general?
I'm just worried that the Fed might bring a hawkish surprise. I don't think they will, but if they do, you know what's going to happen. Dollar's going to rally, commodities going to get sold, the risk is going to get sold. So that 6% in 2 days could go in 1 day. So, you know, I just like to be a little bit cautious. So Chad is saying, no way, what's going to the moon? What could go wrong? Yeah, I know, I'm with you, man. But but I'm just being a little bit more cautious than usual. That's all.
Yeah, good. Okay,
great. Thank you, Grega. That was really good. And thank you, everybody. And we'll see you back tomorrow. I know you're kidding, Chad. I know. All right. Okay. Take care, everybody.
Okay.
Thanks,
Bye-bye.
Grega. Bye-bye. Bye-bye.